Did you know that there are at least 23 million American adults who can't read a want ad?
It's called reading. Top to bottom, left to right. Group words together as a sentence.
Money Life presents.
I'm chatting with my guest, author, lecturer.
You get him to open his mind and his future.
The Book Interview.
Give a kid a book and you'll give a kid a break.
That's gonna be radical, Chuck.
Reading is good. Can we start the story now?
Oh, yes, we can start the story. And this is a story that I suspect you really have never heard before. I knew of the existence, but I didn't know all of the other kinds of pieces behind it. The book we are talking about is The Rise and Fall of the Freedman's Savings Bank and its lasting socioeconomic impact on Black America. The author is my friend Rodney Brooks. Now, you've heard me say I'm back on SABU's board. Rodney, in my original term on SABU, Rodney was a board member back then. He is a longtime financial journalist. His last book, which we talked about on the show, was Fixing the Racial Wealth Gap. He's personal finance columnist at U.S. News and World Report. You can find all about what he's doing at rodneyabrooks.com. We've got a couple copies of The Rise and Fall of the Freedman's Savings Bank, which we're going to be giving away in a contest. But again, rodneyabrooks.com to learn more about Rodney and the book. Rodney Brooks, welcome back to Money Life.
Thank you. Well, I'm glad to be here. Good to talk to you again.
I loved this story because, like you said, I knew of it. I can't tell you where I had first heard about it or what have you, but I knew that basically in the wake of the Civil War, Congress created the Freedman's Savings Bank. Then Congress and a bunch of other things kind of weighed in to make it that the bank failed, basically. Although it succeeded in some of its concepts, I guess. Help tell the story because, again, this is a chapter in history that I think is largely forgotten. So before we get into the lasting socioeconomic impact, just help people understand how Congress created a bank and then Congress contributed to what happened that made it that the bank didn't succeed.
It was, okay, the Civil War was ending, and actually the Civil War had ended, and you had all of these former slaves who actually could now earn money, and they had nowhere to put their money. They could not go to banks. So there were a group of abolitionists in the North who said basically their vision was a bank for Black people, and they took it to Congress. Now, on top of that, which also contributed here, which actually played a heavy part in the creation of the bank, was that you had all these Black soldiers who had fought for the Union side, and they were receiving money. They had nowhere to put their money, and they had no way to send money to their families. So there were Union generals, a couple, who created banks where basically they could do that. So the two forces sort of combined. They went to Congress and they got approval. So the Freedmen's Savings Bank was created at the same time as the Freedmen's Bureau. But Congress created it and they put in charge of it a board of directors of 50 white businessmen. Now, there's some question as to whether all of these, they were all prominent. And it was not clear if any of them or most of them actually had time to devote to running a bank. Now, the second important thing is that there was no money. I mean, there was no money approved to create this bank, which basically is a big problem from the start because some of the founders were actually using some of their own money. So there was this need, and they opened branches without money and seeking the deposits of not just the former slaves and the Black Union soldiers, but the Black folks who were not slaves. But, they started this campaign to notify people about the creation of this bank. They made it sound like it was backed by the government, where it was created by Congress, but there was no government backing. The Congress created it. Now, the second, I think, significant thing is Congress really intended it to be one branch, one bank in Washington, D.C., Somehow that was left out of the legislation in the rush at the end of session rush to pass all this legislation. So what we ended up with was a bank with 37 branches. It grew quickly. They were mostly in the South and the Southwest, but there were, there were branches as far as New York, Philadelphia, Baltimore. So they basically grew too fast. Now you can imagine what communication was like. There was no oversight.
Yeah, this was doomed to fail. I mean, it literally
Yeah.
was doomed to fail. So I wanna move from that portion of the story to the longer lasting impact, because of course what you had at the time that this was founded was you had, in many cases, Black people who had been fighting in the Civil War, who had money because they'd been paid as being part of the service. It was the first time for many of them that they had had any cash, and they didn't have an institutional basis of where to put money. And it kind of created a generational distrust of banks and banking institutions. And that is part of the lingering economic gap that we have. You know, your last book, Fixing the Racial Wealth Gap, it's part of what created the gap, isn't it?
Yeah, yes, and it's sort of a forgotten key contributor because when the banks, actually W.B. Du Bois, the historian and one of the founders of NAACP, said basically the impact of the closing of the Freedman Savings Bank, it had the effect of adding another 10 years to slavery. I mean, that's how big and hard the impact was. And not only did you have the savings of these black former slaves and soldiers, but also they deposited their pensions. Okay, so we were talking about the distrust, and there's some evidence that some of that distrust was passed on generation after generation. And to put numbers on it, when the bank folded, the estimated losses were $3 million. There were 61,000 depositors who were not able to get their deposits, which were about $3 million. And that's equal to about $68 million in today's dollars. Now, there were some stories about the scenes when the bank closed its doors and people just showed up, in these branches trying to get their money, but the bank was closed and it was shut down by Congress. So, I mean, basically, one of the things I look at in the book is what would have happened if these people had not lost their money? What happened if they had been able to use their funds to buy homes, to pay for education for their children, to buy land? So the generational wealth that was lost here, or the potential generational wealth that was lost here, was tremendous.
And in fact, while W.E.B. Du Bois talked about it added 10 years to slavery, I, when I was reading this, was questioning whether it added one or two generations of financial distress. Because as a child of immigrants, right, you look at how quickly, the immigrants have to assimilate, and then it's, when do they do it and how many generations does it take, et cetera. If you don't trust the financial institutions and you can't then use them and get the levers that the rest of the world that is financially savvy does, it's at least one extra generation to me, which is 20 to 25 years. But that has an effect. So for you, as you look at it today, I mean, obviously we're hoping and all the efforts are being made to try to close the gap. Are there still lingering effects? Is there still stuff where this is why we have a minority community generally that is still financially distrustful of the institutions?
Well, let's look at this as a starting point because because there were issues that were piled on afterwards. I mean, this people remember. People lost money, and most of them, and I should say, towards the end of it, there were like 10% of the depositors were white. They got their money out. The people who were left were the poorer people who would never really, even though there was a process set up where people could get reimbursed, and most people did not even apply. And it's a question whether they heard about it. But, getting back to that question, even after the bank closed, it wasn't like banks welcomed Black depositors. So on top of that, you had basically the discrimination of the housing discrimination, mortgage loan discrimination, and redlining, which basically pushed Black residents into neighborhoods where home values were not increasing and not good at all. So basically, the bankers, as time went on, basically added to this distrust, so that there is still a distrust. And if you look at the numbers even today, Black businesses have a much less chance, small businesses in particular, of getting a loan from a predominantly white institution. And when they do, it's at a higher interest rate and a lower amount.
Yeah, that is a huge part of the gap that needs to be repaired. Again, the book gives a great picture of why society is the way it is, dating back to a piece of history that I think most people either never knew about or have completely forgotten. Rodney, I wish we had more time to discuss it. We don't, but thanks so much for joining me to talk about it.
Okay, thank you for inviting me.
That's Rodney Brooks, and his latest book is The Rise and Fall of the Freedman's Savings Bank and its lasting socioeconomic impact on Black America. It is a great read. We've got a couple copies we're giving away in a contest, so make sure you're paying attention for that. And again, if you want to get more information on Rodney and his books, rodneyabrooks.com. We've got more to go on this edition of Money Life, so settle back, relax. We'll take a quick break and be right back to the financial talk in just a moment.